Welcome back to the Deep Dive. We're here to cut through the noise and get straight to what matters in the latest earnings calls.
And today we got a really interesting one. Recordati's first half 2025 earnings.
Yeah, this European pharma company, they had their call July 30th during Borsa Italiana trading. And, well, the numbers look pretty strong in places.
They did, but the market reaction was, let's say, a bit hesitant initially.
Exactly. It's a bit of a puzzle. Strong results, but investors seem to pump the brakes. So our mission today, figure out why. Let's dive in.
Right. It's that classic situation where the headlines maybe don't capture the full picture, you know?
Absolutely. Felt almost like a knee-jerk thing.
Yeah.
So let's lay out those headline numbers first. You had GAAP EPS, the reported earnings at 1.05.
Which was just slightly under the consensus, right? 1.0 or is the expectation.
Just a hair under, yeah, a slight miss. And, that alone can grab attention, trigger some automatic selling maybe.
For sure. But, and this is key, their adjusted EPS looked much better.
Ah, right. The non-GAAP figure.
Exactly. That came in at 1.59, actually beating the 1.54 consensus. So straight away, you've got this disconnect. What's reported versus what they see as underlying performance.
Okay, so a GAAP miss. Adjusted beat. What about the top line, the revenue?
Oh, that was a clear win, definitely. Hit $1,323.8 million.
Which was above the $1,300 million consensus.
Comfortably above. That's an 11.7% increase compared to last year. Pretty impressive growth for a company their size.
Okay, so strong revenue, solid adjusted EPS beat, but that little GAAP miss hanging there. How did the other core metrics stack up? Like profitability?
Looked really solid. EBITDA, earnings before all the interest, tax, depreciation stuff that was up 9.6% year over year, came in at $496.3 million.
And the margin? Still
very strong, 37.5%, shows good cost control even while they're expanding. And adjusted net income, again, stripping out the noise, that grew 8.9% to $327.8 million.
That sounds like healthy profit flowing through. What about cash? Cash flow and debt are always crucial, right, for future growth?
Totally. And their free cash flow, FCF, was strong, $256.8 million.
Enough to cover dividends and things.
Yeah, more than enough to cover their May dividend payout. That tells you they're generating real cash. And they actually managed to nudge their debt down a bit relative to EBITDA. Kept it below 2.3 times.
So financially healthy? They've got dry powder for M&A and things like that?
Exactly. Plenty of flexibility.
Which just brings us back to that market reaction. Strong numbers, good cash flow, debt managed well. But the stock slides almost 3% right after the call. On heavy volume, too.
It is fascinating, isn't it?
So what gives? Where's the disconnect? Let's dig into that performance breakdown.
Okay, so that robust revenue growth, it wasn't just, one thing. It was broad-based, double-digit growth across both their main areas.
Specialty and primary care and rare diseases.
Yep. Specialty and primary care was up 5.1% like-for-like constant currency. And rare diseases, which is super important for them, jumped 12.8% like-for-like constant currency.
And that constant currency bit is important because they mentioned FX headwinds, didn't they?
They did. A negative 2% impact in the first half. Mainly the Turkish Lira, apparently, but also the US dollar is starting to bite more.
So even if sales are booming locally, a weaker currency means fewer euros when they report it.
Exactly. It can mask some of the underlying strengths.
Okay. And profitability, that 37.5% EBITDA margin looks good, but were there any, caveats?
Well, they flagged higher investments. Not necessarily bad, right? These are strategic things supporting product expansions, integrating acquisitions.
But investments cost money now, even if they pay off later. Puts pressure on a margin short term.
Precisely. So good cost control overall, but also spending to grow.
And that probably links back to the GAAP EPS miss, too, because you mentioned non-cash charges from the Enjaymo deal.
That's right. And some one-off restructuring costs, Italy and Spain mainly. These things hit the GAAP number.
How one-off are they, though? Is it acquisition noise or ongoing costs?
It seems mostly one-off. Things like amortization of intangibles from a deal that's an accounting thing, not cash out the door. Restructuring is usually temporary, too. The adjusted figures are meant to show the real operational picture without that stuff.
Okay, so the underlying business is probably healthier than the GAAP number suggests on its own.
That's the argument, yeah. And the strong free cash flow kind of backs that up.
Makes sense. Okay, let's pivot slightly. Beyond the numbers, what about strategy? Big moves, innovation.
Well, the big one was this licensing deal with Amarin for Vazkepa. That's a cardiovascular drug.
Right, I saw that. Expands their footprint quite a bit.
Hugely. into 59 countries for their specialty and primary care business. It fits really well with what they already do. It's a classic Recordati bolt-on deal.
What does it mean financially? Short-term cost versus long-term gain.
Yeah, exactly. Short term, not much revenue this year, less than 10 million expected, and actually slightly negative for EBITDA.
Why negative? Upfront payment.
Yep. $25 million up front, plus all the costs of launching it in nearly 60 countries. But long term, looks much better. Expected to be EBITDA positive from 2026, and they're targeting over 40 million in revenue by 2027.
So classic invest now for future payoff makes sense. What about innovation, pipeline stuff? I saw something on Isturisa.
Oh yeah, big news there. The FDA expanded the label for Isturisa in Cushing syndrome back in April. Broader use now.
And uptake.
Sounds really good. Management said over 1,000 U.S. patients are already on it since the expansion. That's fast.
Wow.
And they're really leaning into it, increasing investment, especially targeting the milder forms of Cushing's, which is a bigger market. Clear growth engine for them.
Any other key approvals? Pharma pipeline is always critical.
Definitely. They got European approval for an ultra-orphan drug called Mayapleave and launched Signifor LAR in China.
And the impact of those?
Pretty significant, actually. Together, they think these could expand the potential patient pool by over 30%. And they've upped their peak sales estimates by about 250 million because of them, really solidifying that rare disease focus.
And Enjaymo, the acquisition from before, how's that doing?
Still performing really well. Integration's going smoothly. Sales were up 26% in the first half on a pro forma basis.
Wow, 26%.
Yeah, contributed over 69 million in revenue just in H1. They expect it to hit 150 million for the full year. Looks like a very successful deal.
Okay. Any other R&D bits?
They started a clinical trial for dinutuximab beta in Ewing sarcoma, so pipeline is still moving forward beyond the current launches. Good sign.
So pulling it all together, strong underlying growth, good strategic moves, Vazkepa, Isturisa expansion, Enjaymo firing. But then you have the FX drag, the investment costs hitting GAAP. What did they do with the full year guidance?
This was maybe the most telling part.
Did they lower it, given the market dip and the FX getting worse?
Nope. They held firm. Reaffirmed the full year 2025 targets, despite saying they now expect FX to be a bigger drag, about -3% for the year.
Really? That's confident.
Very. They're still guiding for double-digit growth across the board. Revenue 2.60 to 2.67 billion, EBITDA 970 million to $1 billion, adjusted net income 640 to 670 million.
How do they expect to hit that, especially with tougher FX? What's the plan for the second half?
They talked about a more balanced phasing of margins. Basically, they expect the revenue ramp up from things like Isturisa's new label and continued strength from Enjaymo to really kick in during H2.
So the investments start paying off more.
That's the bet. They're putting money behind those growth drivers, and they seem convinced it'll deliver the numbers needed to meet guidance.
Okay, let's zoom out. Investor context. How's Recordati actually done compared to peers?
Pretty well, actually. Its total return has beaten the Euro Stoxx healthcare index over the last 1, 3, and 12 months. So it's been an outperformer.
What about catalysts leading into the call? Anything that might explain the reaction? Maybe profit taking?
Could be. You had a positive Vazkepa deal news in June. There's always the background noise about CVC potentially selling its big stake that creates buzz.
Right, the private equity owner.
Exactly. CVC owns 51.8%. And Recordati did have a strong Q1 beat earlier, although, like we said, the stronger euro was starting to become a headwind even then.
So that immediate stock dip, was that the whole story? You mentioned a mild disconnect earlier. What did analysts say?
Yeah, it wasn't universally negative. Sell side, like Berenberg, stuck with their buy rating, 60 euro target. They saw the growth offsetting the FX.
But not everyone.
No. Citi mentioned a cost creep tempers upside, which definitely ties into that GAAP miss and maybe spooked some people. Media coverage seemed okay, praising the guidance hole.
And the buy side, actual investors.
Seems like maybe some trimming, perhaps taking profits after the good run, suggests maybe more of a wait and see on those H2 promises rather than a big loss of faith, maybe an overreaction to the GAAP figure.
Okay, so looking forward, what are the key things to watch? The catalysts.
Few things coming up. September, there's a European regulatory decision, CHMP, on a dinutuximab beta combo study. Could open up new uses.
And Q3 results.
Crucial. That's November 11th. We'll get the first real look at how Vazkepa uptake is going. Is that investment starting to show results?
And the CVC stake?
Always hanging out there. Any news on that potential sale could definitely move the stock. Big unknown.
Given all that, is a guidance raise even plausible down the line?
You know, it's not impossible. If FX stabilizes, maybe the euro weakens a bit.
No.
And if those launch curves for Isturisa and Enjaymo really take off like management hopes, yeah, a raise could happen.
Especially with their heavy investment push now.
Exactly. And remember, their long-term plan targets over $3 billion in sales by 2027. Shows they have ambition.
One last thing in the macro picture. U.S. drug pricing talk. How does that affect Recordati, especially with their rare disease focus?
Yeah, that's a really important point for them. There's all this talk about potential price caps, maybe 15%.
Which sounds worrying for pharma.
It does. But the signals suggest rare disease drugs might get special treatment, maybe even excluded from some of those measures.
Because of the unmet need.
Probably. So Recordati's big push into rare diseases could actually provide a bit of a buffer against those broader pricing pressures. It's a strategic advantage, potentially.
All right, time for the investment committee room. Our This Is Not Financial Advice segment. Given everything, the mixed reaction, strong underlying stuff, reaffirmed guidance, catalysts, what's an outrageous but plausible trade idea here?
Okay, let's brainstorm. You've got that 2.9% dip. You've got a spike in near-term implied volatility. The market expects some kind of move soon. And you've got this disconnect we talked about.
Right. Management confident, market hesitant.
So one idea, you could go long the stock, but maybe pair it with selling some out-of-the-money put options.
Explain that bit.
Selling puts means you collect a premium up front and you agree to buy the stock if it falls below a certain price. It lowers your effective entry point if the stock stays flat or goes up, or if it only dips slightly.
So you're betting against that initial negative reaction.
Essentially, yeah. The outrageous part is fading the immediate negativity. The plausible part relies on management delivering that H2 ramp-up they promised for Isturisa and Enjaymo. The guidance hold and the upcoming catalysts like Q3 add weight to that.
Interesting. Using the volatility. Any other angle? Maybe playing the M&A speculation.
Definitely an option. That CVC stake sale is a big potential catalyst. So you could look at longer dated, slightly out-of-the-money call options.
Betting on a higher price later.
Exactly. It gives you leverage more bang for your buck if the stock moves up significantly, but with defined risk. You're betting that a resolution to the CVC situation, maybe a sale or a deal, unlocks value and pushes the share price higher.
Got it. Two different ways to potentially play the situation. Okay, let's wrap this up.
So Recordati's H1 call. A bit of paradox. That immediate market dip, the GAAP EPS miss, they were real.
But they sat alongside really strong revenue growth, an adjusted EPS beat, smart strategic moves like Vazkepa, and real progress with key growth drivers like Isturisa and Enjaymo.
In management, doubling down on the full-year guidance, despite headwinds, they're clearly banking on a strong second half.
The long-term story, especially that rare disease focus, seems intact, even if the market had a moment of doubt.
Right. Short-term noise versus underlying trajectory.
Okay, as always, remember everyone, this deep dive, it's purely for informational purposes, definitely not financial advice. Please, do your own homework. Talk to a pro before making any investment decisions.
So what really stood out to you listening in? Was that market reaction justified or just a blip in a positive story? We'd love to hear your thoughts.
Until next time, stay well informed.